Each generation has its jackpot moment. For the 1800s, it was prospecting for gold. In the 1990s, it was investing in the internet. Nowadays, it's artificial intelligence, and one firm is selling the shovels for this electronic gold rush, NVIDIA. NVIDIA alone generated over $117 billion in revenue last year, exceeding the GDP of entire countries like Hungary or Morocco. Its stocks have propelled the company's market capitalization beyond $3 trillion, placing it alongside Apple and Microsoft. But here's what keeps investors awake at night. Is NVIDIA the foundation of the future economy, or is it another runaway storyline due for a vicious reality check, a la the dot-com implosion that evaporated trillions in 2000? NVIDIA isn't just a chip company, it's the motor driving the stock market. Over the last 2 years, one stock, just NVIDIA, has generated almost 1/5 of all S&P 500 gains. Translation? If you have an index fund in your retirement account or 401k, you already own NVIDIA. Your economic future is more dependent on Jensen Huang's vision than you might know. Rather than factories that manufacture cars or steel, Jensen Huang refers to NVIDIA's data centers as AI factories. They don't make physical products. They make intelligence. All the large-name AI projects, all of them, from OpenAI to Google to Tesla, use NVIDIA GPUs. The Blackwell chips are 30 times more efficient than the previous generation. So it's like going from a bike to a jet engine. The demand is crazy. Microsoft, Amazon, and Google are investing hundreds of billions of dollars simply to secure NVIDIA chips for the next phase of AI expansion. That's equivalent to selling concert tickets before the stage is even constructed. NVIDIA generated $117 billion of revenue in the second quarter of 2025, up 240% from a year ago. Profit margins? Near 78%. To put that in perspective, Apple's margins are in the mid-40s, Intel is in the low 40s, and AMD is in the low 50s. NVIDIA operates at nearly double what its rivals achieve. But the red flag is this: NVIDIA trades at a forward price to earnings ratio above 60. For each dollar the company is estimated to earn next year, investors are already paying $60 today. Compare that to the market average of around 21. That is a premium investors are paying, but it's risky. Here is where investors need to be brutally honest with themselves. On one hand, NVIDIA is the pick and shovel play of the AI revolution. Every digital prospector needs its chips, but history tells a cautionary tale. In 2000, Cisco was once the most valuable company in the world, supplying the routers and switches that powered the internet boom. When the bubble burst, Cisco lost nearly 80% of its value, and it has never returned to those highs, even 2 decades later. So, is NVIDIA today's Amazon? Or today's Cisco? That's the multi-trillion-dollar question. The dangers are legitimate. Competition is increasing from AMD, Intel, and Google. Valuation is extended, more than $3 trillion as of now. Geopolitical risk is out there, as the majority of NVIDIA chips are manufactured in Taiwan. And if AI enthusiasm eases, revenue may plateau. For everyday investors, NVIDIA isn't just one ticker, it's a market signal. If NVIDIA rises, it can drag the tech sector and the broader market up with it. If it stumbles, it could weigh down everything from retirement accounts to pension funds. Yet there is a means to diversify as well. Rather than betting everything on NVIDIA, some investors are turning to the AI ecosystem. Cloud providers, semiconductor equipment manufacturers, data center REITs, and cybersecurity companies. And that's where it gets human. Jensen Huang is not your average CEO. He was a dishwasher at Denny's as an immigrant before he co-founded NVIDIA using only $40,000 as capital. He's worth over $110 billion now, but still shows up in a black leather jacket educating chips to the world like it's a college course. For investors, leadership isn't just fluff. It's often the difference between a company that survives disruption and one that collapses. Huang's clarity and long-term vision are part of why Wall Street still bets so heavily on NVIDIA. So what's the game here? NVIDIA could be the Standard Oil of the AI age, building infrastructure that undergirds industries for generations to come, or could be this generation's biggest bubble, poised to burst under the weight of overhype and stratospheric expectations. For savvy investors, the solution is balance. It may make sense to own some NVIDIA, but putting that wager in the context of other AI-themed investments can help diversify risk. At the end of the day, markets reward patience, but they punish blind optimism. Whether NVIDIA becomes the backbone of the AI economy or a cautionary tale depends on what happens in the next 5 years. Now I want to hear from you. Would you buy NVIDIA at current prices, wait for a correction, or stay away altogether? Leave a comment. I'll be reading.